Okay. I think it is evident from what we heard from many of the speakers earlier that the first, perhaps most important, certainly more mature and maybe more promising application of blockchains or disruption of blockchains in the existing status quo has to do with financial services. And I'm really excited because we have put together a great panel here to discuss the implications of distributed ledger technology in the world of financial services, consisting from people that represent professional services and technology development, the VC dimension and outlook on the things, social trading and practical applications in the retail side, and also central banks and regulation and how this all fits together. And among our panelists, I think we do have some important real-life cases to discuss, and this also makes a huge difference because, to be frank, we've been discussing blockchains for the past couple of years semi-seriously in the world of enterprise applications, but still there are few real-world live production applications that we're seeing, and some of them have been developed or overseen by the people that we have in this panel. So I'm looking forward to hearing what they have to say. I will let them introduce themselves, and then I'll start with a few questions. I will try to involve the audience as soon as possible in this discussion. I'd like this to be as interactive as possible, so I will not be waiting until the end to ask questions. Feel free, if you want at some point, please raise your hand, and we'll give you the floor so that we have a more lively discussion. So, John.
Thank you. I'm John Belisarios, Accenture's Global Blockchain Technology Lead. I'm based out of London. I've been focusing on the blockchain space for the last 3.5 years. Actually, the first project I ever worked on was a central bank project in the blockchain space. I also lead up our CBDC, Central Bank Digital Currency campaign and projects within Accenture, and focused pretty much in financial services.
Hello, my name is Panos Papadopoulos. I'm a partner at Marathon VC, a seed venture capital based out of Athens, Greece. Really interested in blockchains for the last 3 years, by either investing or even coding. We have Nordblock, which Astianax talked earlier, is our first investment. And I'm also a student at the course here at the University of Nicosia.
Hi, I'm Yoni Assia. I'm the CEO and founder of eToro, the world's largest social trading network, where we have 6.5 million users who trade stocks, commodities, indices, currencies, and digital currencies in a transparent manner where everybody can see, follow, and copy top traders from all over the world. We have global offices, a large one here in Limassol, Israel, China, Russia, UK, and Australia. And we've been involved in the blockchain space since 2010. Excited about the opportunity of tokenizing financial assets on top of the blockchain, with understanding that in the next 10 to 15 years, probably majority of assets worldwide, $150 trillion plus, are going to move into the blockchain.
My name is Evangelos Tabakis. I'm currently the head of risk management for the Central Bank of the UAE in Abu Dhabi. I've been a central banker since 2000. I worked for the ECB in Frankfurt in areas like risk management and market operations. Oddly enough, I started my career in academia with machine learning and the relation to statistics. So I'm excited about these topics, both from the let's say, academic point of view as well as the regulatory point of view.
Excellent. Thank you very much. I'll start with you, John. Okay. I know that you've been working with banks and lately also with central banks in pilots, prototypes, and some real-life production applications. So could you give us your view on what you think are the most prevalent use cases that are starting to make a real impact in the world of financial services, and especially banks, as we speak now in 2017?
Sure, thank you. I would start with a lot of the money movement applications. So we see lots of applications in financial services to address the problem of moving funds cross-border. So we see lots of implementations in this area, and we've been involved in those ourselves, putting things into production environments. That's very interesting because that's sort of the first area. The scope of these applications is very well defined, very well understood, quantifiable. And the primary driver for those kind of applications is really speed of execution. So being able to move money cross-border in multiple currencies if needed, and in many cases they are, in seconds rather than days is a significant benefit for many of the financial services organizations. In addition to that, more recently we've seen lots of interest in the trade finance space. And we've been working with clients, a large consortium of banks, and mostly in a network environment, of course, because of the benefit of DLT, of course, in trade finance. So things like tracking trade and making payments cross-border, multiple entities. There's a huge area in the trade finance space in there as well. And of course, we've also been working with exchanges, market infrastructure players, applying blockchain and DLT to things as applications such as electronic voting for shareholders. We've done a number of those kind of engagements, and that's financial services, but not the traditional sort of application of in money movement, for instance. So there's a variety of different applications that we're seeing. There's many more, of course. And now the take-up and the level of interest specifically in the central bank space is actually quite interesting because there's a lot of activity now, and primarily driven by the take-up of these applications in financial services across the board.
Fantastic. May I follow up a little bit on that? Sorry, guys, but I got intrigued by the answer. I understand, from the user point of view, the obvious benefit of doing cross-border payments using cryptocurrencies or distributed ledger technologies. I'm not sure how positively a bank or an existing incumbent, player in this industry would think about these things, because obviously they are competitive to what they're doing now, and they eat up on their commission structure and everything. How do the banks approach this? Do they see this, as a novelty experimentation? Do they actually think that it will become at some point the prevalent way of doing cross-border payments?
I'm not sure about the most prevalent way, but at least in the clients that we've been working with, the interesting application of this is primarily for speed of execution. For cutting back office costs and inefficiencies that the banks themselves face. Now, of course, how they pass that on to the customer, to the end consumer, is a difference. That's basically a decision by the bank. But if you can take a process that takes several days and collapse it to seconds, you generate a lot of benefit out of that for the consumer as well. So even if they pay the same fee, the speed of execution is a primary driver for attracting new business for them. I won't talk about costs because that's ultimately their decision about that.
Okay, excellent. So, Pano, you come from a VC, and as you said, you decided to make your first investment not in any of the areas that John mentioned earlier, but instead focusing on compliance. Can you tell us a little bit about the reasoning and rationale behind this, and how do you see the adoption?
So I think, first of all, like the blockchain in the financial services, it's really not anything disruptive. It's just an improvement on efficiency. Internally, we believe that essentially what a private blockchain does, like in a consortium or within an organization, is a deflation. It's a deflation for enterprise costs. So you make the bureaucracy of organizations cheaper, and you make the need for more software, more services, again, smaller. So what we try to do with regulation tech, which is the case of Norblock, is that essentially you have the customer sending files all the time, duplication of work, and essentially, let's say, our enemy here is attachments and email. And that's what we want to make better with Norblock. So we're looking at the private blockchains. We're also looking at cases in shipping and trade, where essentially you have this chain of people that they have to be on the phone. Maybe they don't trust each other's database, or they have to double check. And we want to make sure that there is this chatty protocol, which is the blockchain, and everybody sees that the changes, everybody has heard the same. And eventually, we want to reduce the time you spend on the phone or the email, or perhaps you buy less software from Oracle, to have a ledger. Like if everybody agrees on a contract, and of course, ensuring that the contract is right, that's a different opportunity for us, VCs. But eventually, the world is run by bureaucracies because we shouldn't be dependent on, on a person's mood or a person's ability on a specific day. But this cost is really high, and this is why actually the nation states exist, to make sure that the bureaucracy is running and is keeping your property there. But over the years, we see that, the bureaucracy is getting more and more expensive. And for us, the private blockchain is a way to deflate the cost. Now, the public blockchains, though, this is where the real disruption comes in finance. And nobody knows how things are going to look 20 years from now. It's like being before the Renaissance and asking, what the Catholic Church will think about universities or nation states, because they weren't there. It's totally irrelevant, in my opinion. Of course, opinions are just opinions, and they are very close to religion, actually. But this is where we see, there will be very interested for us from a VC perspective to explore what opportunities exist in the public blockchain, the public finance space. One of the ideas I'm entertaining quite a bit is how do you make sure that the contracts are doing what they're supposed to do? Especially, let's say, if you're a consumer or an investor and you put some money in a contract that maybe is a CDF, or maybe it's an option call or a future, or something pegged to some other value. If you're the investor or even an attorney, how do you know the contract works? So you need someone to actually attest and maybe ensure even the execution of smart contracts. So there will be new business models that we cannot even fathom today. And we start seeing, some opportunities. Some people is in a garage. There was this company called QuantStab that did an ICO, though, to
Not
make
yet.
this insurance, on the Ethereum contract. But when it comes to the business contracts running inside the companies, or doing new kind of synthetic products that they're not executed, let's say, by the Chicago Mercantile Exchange, but they live somewhere. That's all these building blocks. They will need a lot of support, the new business model to support them, and perhaps a bank of the future will be, an insurance company against all these digital assets.
Excellent, thank you. Yoni, your company has taken a different approach, trying to turn the idea of trading on its head and work on social trading. Do you want to tell us a little bit of what you're doing? How does distributed ledger technology fit into this, and how do you see this model disrupting the world of trading as we know it today?
Sure. So first of all, the vision of eToro was always to open the global markets for everyone to trade and invest in a simple and transparent way, and therefore we believe in transparency. Every person who trades in eToro, stocks, commodities, indices, cryptocurrencies, show their portfolio to everybody in the network. So when we saw the blockchain, we said, that's great, that's transparent money. It fits with the vision of eToro. But I'd say the most important part is we've been dealing for a long while with integrating all of our systems to the biggest banks and brokers around the world and the exchanges. And you realize that everything is broken because there are no clear standards. Some things are T+1, T+2. You need actually to have accountants to reconcile what's going on. So it's a very, very archaic business, actually, dealing with financial institutions. And surprisingly, or not surprisingly, financial institutions are actually extremely late adopters. So we started putting our own ledgers and basically exposures on the ledgers just for me to be able to see in real time where is everything for the CEO to be able to see everything on general ledgers. We're one of the largest traders, basically, our customers trading cryptocurrencies. And what we see is a huge difference in where the technology is between traditional finance and basically this new finance world, which is the blockchain companies, where everything is blockchain native. Everything by definition is registered immediately on the blockchain. So basically pre-trade, trade, and post-trade are all the same basically function. And we find it fascinating because we believe, again, that everything will be transformed to work on the blockchain because it's basically more efficient. It's truly digital. Traditional finance, people don't understand that. Traditional finance is not digital at all. It's analog. Everything is still broken. And the blockchain enables us potentially to truly be connected.
Excellent. Evangela, you've got a unique perspective into things. As you said, you were at the European Central Bank. Now you are working for the Central Bank of the United Arab Emirates, and because of what Dubai is doing at the governmental level, obviously, you're probably called to advise or regulate or oversee a number of things that are not on the pilot level, they are directly at the production level, because the vision is by 2020 to have all government documents on the blockchain. So do you want to tell us, take us a little bit, if you want, even historically, how have central banks approached regulation and overseeing of digital currency and blockchains? How has this changed lately, and what do you see are the trends in the future, both at your jurisdiction and throughout the world, as you see things developing?
There's a lot of questions. I think if you try and go back and see historically what has happened, central banks and regulators are, I think, inherently a bit careful of things when new technology comes up or new financial innovation in general. So there was caution around in the air a lot, and even today you would see somehow that there's a tendency to separate cryptocurrency, which is a specific application of blockchain, or which there's still, I would say, some kind of skepticism from the area of central banks and regulators, trying to basically warn people about the fact that this is not legal tender, therefore you are not buying the currency or an electronic form of the currency that very well and you use in your grocery shop, but you are buying something else. It's more like a commodity that you're buying, like you're buying gold or silver. That's one thing. On the other hand, they are seeing all the potential that comes in simplifying and lowering the costs of the financial intermediation, which is what has been already mentioned here. And this is particularly good. If you look at also jurisdictions like the UAE and other countries in the area, financial inclusion is a very big topic. There's a lot of people in those countries which do not have a bank account, mainly because it's too expensive for them to have a bank account. How do you get these people integrated in the financial system? You don't want them to be paid in cash by their employers, because that comes with a number of risks. So you want to have some form of you incorporate them in some form of digital payment. So that's something that, as you mentioned, the Dubai initiatives, that the government in the area wants to promote a lot. That I wanted to make also a point about the issue of cross-border, because one of the issues that comes up in some countries is correspondence banking. Cross-borders usually depend on having some bank somewhere in the world, which is the fifth link in the chain, which takes my money and sends it to my cousin in the US. It's me, it's my cousin, it's my bank, it's my cousin's bank, and there's a correspondence bank in the middle. And in some countries, it's very difficult for the local banks to have a correspondence account for reasons that have to do with anti-money laundering, regulation, or other reasons. So anything that will provide a solution that will avoid, not to mention the cost, that will avoid the use of correspondence banking and find another way to do that, will be welcome in these jurisdictions.
John, let me follow a little bit on the first aspect of what Evangelos just said about cryptocurrencies and how central banks are working with or against, I don't know. Lately, we have been seeing lots of news about central bank operated or designed or led or owned digital currencies. Do you see this actually happening? And if yes, what do you think that the implications this will have both for the operations of the financial system and for the average user at large, because obviously if people have access to the e-euro, the e-dollar, the e-dirham or whatever other currency, this would fuel, in my opinion, a spillover effect to non-central bank regulated currencies. It will give more legitimacy to Bitcoin and others. So how do you see this playing out?
That's a very good series of questions. This is an area that we've been working in for quite some time. We have actually an extensive point of view on this, so I sort of urge attendees here to actually look at on our website to see this point of view. But to answer the questions, I guess central bank issued digital currencies is basically fiat currency that's been tokenized and put into a blockchain ledger and used to fuel commerce and trade, either from a commercial banking perspective, between banks and between entities, and eventually down to the consumer level. Some central banks have taken a fairly consumer-oriented view. Like, for instance, if you take a look at in the Nordics, there are a number of, there's a campaign by sort of the Central Bank of Sweden, actually, to look at central bank currency for consumer usage. Other central banks have taken a view of how do they look at it purely from a commercial bank perspective. How do they do real-time, fast settlement with tokenized fiat currency that is backed by a central bank? So zero default risk, instant settlement and payment, and in addition to that, providing all of the efficiencies that you can gain by using such a system, such as no need for reconciliation, it's auto-reconciled, and there's a whole bunch of stuff that comes with that. There are things that need to be studied, because from an economic perspective, that's a completely different animal than sort of typical currencies that we have today. For instance, when you bank such currencies, what does that mean? I mean, you're ultimately giving possession of your cryptographic currency to some financial institution. So how you bank it, if you bank it at all, and that can create cascading implications from a fractional reserve banking perspective, and have other wider economic impact. And that needs to be studied, right, very, very carefully from a consumer perspective. But to answer the question about are banks doing, central banks doing this, absolutely. I mean, as I said before, one of the first things that I ever did was work with a central bank to actually study this in a lot of detail and prototype solutions around this. And now what we're seeing is the desire to kickstart production-grade implementations of this for commercial bank settlement purposes. If I look into the future, I think we're a number of years away from having such a system for consumer usage, but it's inevitable. This is a wave, and it will come because the efficiencies are definitely there. And I think there's a lot of benefit, both from a government, from a commercial perspective, but also from a consumer perspective. Fundamentally, what that means is a consumer can now hold a cryptocurrency that is backed by a lender of last resort, and the challenges that you have with public cryptocurrencies that you have today go away when you have a central bank that can issue and manage such a system in the economy. Sorry, it's a long-winded answer to your question, perhaps. But
you did, but you generated another question. So please help those of us that are not so proficient in what having an e-currency backed by a lender of last resort like a central bank would mean for the average consumer. So what is the difference for me having Bitcoin or having our European Central Bank backed Bitcoin? So Yoni, I don't know, you want to say something?
First of all, I think the question is only when, not if it's going to happen, because it's the difference between, digital and analog, so it's unavoidable. We will have central bank issued fiat currencies on top of the blockchain. Now there's a huge tension because this role is of local banks today. The role of digitizing money in every country is the local banks who are in charge of the bank accounts for consumers. But what happened is today you can issue an Ethereum and ERC20 token, so potentially any central bank in a week's time can issue their digital currency. All they need to do is to post, here we issued $10 billion, and whoever comes to us with this will pay him back in cash if he wants, and vice versa. So it's super, super simple. Security is handled already. Now the question of the benefit from a consumer point of view is think about every type of transaction is immediately being done peer-to-peer. So you go into a taxi and you pay directly the taxi to his ID that holds the bank. So there's no intermediary, no bank, no credit card, no Silicon Valley-based company to charge technology fees in the middle. So it's like everything becomes peer-to-peer transactions. But I think the most disruptive part is if you take a small country, it doesn't matter which country, whether it's Israel or any other country, which decides to issue digital currencies, or Cyprus to issue a digital currency, suddenly every citizen of that country can now receive payments from anywhere around the world, which is mind-blowing, because for a citizen of any country with its local currency to actually get employed by an entity in another country is extremely difficult, because that company needs to open an entity, needs to understand local laws, needs to understand how to employ people. Suddenly, people can get paid, businesses can get paid from basically any country, any person around the world. And that's a huge transformation in basically connectivity. So it enables basically access to capital, which is what we see in ICOs. It enables access to e-commerce, which is not there yet, but we'll see it happening. But I think ICOs is just an example of one part of financing seed stage companies, and we'll see every type of financial transaction basically transition in the same manner.
Can I just add to that? Yeah. So if you take a look at the current cryptocurrencies that are there, obviously there's a huge, and even today, price fluctuation of the cryptocurrency, which makes it a very inefficient payment mechanism. It's a great asset to hold. It's always appreciating. It seems to be appreciating in value quite a bit, but as a payment mechanism, it's actually very problematic. Especially when you're transacting, right? So I'm buying something and it's generating the wrong kind of sort of consumer behaviors to more hoard this cryptocurrency because it's appreciating in value. If you had a cryptocurrency that's pegged to the cryptocurrency of the nation, there's no incentive to do that. At the end of the day, it just becomes a very much more efficient mechanism for payment and settlement of transactions in real time. But there's no, I guess, downside of currency fluctuation other than with other foreign currencies.
I think we're examining this issue from a very technocratical point of view, and we should never forget that fiat money is political money, and the very existence of the nation state is to have monopoly over money, I mean, usually, and monopoly of violence, right? So if there's like a cryptocurrency pegged to a national currency, and if people are having, they can store it with their own keys, and they can put their keys in a treasure, it means that this now, nation-state-backed money is going to be not be able to be confiscated by a government, and it's not going to be able to perhaps to be tracked. Right now, we're seeing a crackdown on cash and privacy, where all the nation-states they have to pay their fees to Visa and Mastercard, and now we're talking about something completely different, like essentially a world of voluntary association. So you can't track my money, and I can maybe tax it if I, if I can prove it to you, maybe give you taxes. The rate that I want, or the one, I can hide. And I think it will be very, very difficult. Or either we go to a Orwellian scenario where, like, I don't know, maybe in Russia, when the ruble is completely, like, now digitized, and essentially they create their own MasterCard, but they don't give the keys to the people. And perhaps, it's not like a cryptocurrency with a blockchain that protects privacy, I don't know, like Monero or Zcash. And there you have a complete control of the monetary supply and what people are doing. And then you have resistance. So therefore, this currency is going to worth nothing. So we have to examine, the cryptocurrencies when I'm talking about like payments, and if we have nations, if we're going to have like issued by a central bank, always in comparison with sovereignty. And what we'll see is like there'll be competition. I guess there'll be the smaller states that they have nothing to lose. We saw Vanuatu like 2 weeks ago. They said that you have to pay us 44 bitcoins. We give you residency, we give you a passport, and you don't pay any taxes. Just pay us 44 bitcoins up front. So we'll see like a competition in nation states. Some of them, they're going to do this, and they're going to invent new ways to actually offer residency and citizenship. So I think, this kind of changes we're discussing right now, they're going to have huge political implications that maybe redesign the worldwide map in 50 or 100 years from now.
Let me follow up a little bit on that, because the political implications, I think, are the most important for me. I can clearly see the economic efficiency. I can see the benefits in the global movement of, capital or labor. I can see all the economic arguments about this, and I can see the reasons why the central banks are looking into it. But as Panos is saying, this thing would probably be a nail to the coffin of the nation state as we know it now. I mean, if a nation state surrenders control over its monetary policy and how they handle them, they have the monopoly of money, this is something that goes against their first instincts, let's say. Maybe long term it might make sense, but it doesn't make sense at the first look at it. So, do you see central banks developing an antagonism with their governments on that, especially in what is happening now in the work you're doing, Evangel or John? Or do you see governments working with the central banks on this?
I'll just pump into that. So I see them being very aligned. I think central banks are an extension of the government at the end of the day. And so for the conversations that we've been having have all been around ensuring and preserving the integrity of the financial system of the country, of the nation state, right? So issuing such a cryptocurrency doesn't have to have such a cataclysmic effect, at the end of the day. The whole idea is that you're doing it for efficiency purposes, not necessarily to create an antagonistic sort of situation. And in many respects, I see that issues like anonymity and privacy and confidentiality of transactions, the ability to confiscate and all that, those are all by design decisions that you need to make, and you need to study these very, very carefully, because how anonymous money is and how controlled it is and who has control of it at the end of the day are going to be fundamental basis about whether this is ever adopted or not. So if people are confident about it and so on. Clearly there are economic benefits, but whether there are social, the social acceptance of it is going to be a key factor of that.
Yeah, I think to come back to your question, we are talking still about a currency that will be issued by the central bank would still be legal tender. So I think in this framework, you are still in control of the currency. Yeah. There are two interesting observations about the case where we have such an electronic equivalent. One is we've seen, for example, well, the other two ways of issuing central bank money is to issue these things, cash, and to credit the accounts of banks or the government in the central bank. These are the two ways. There's no way, usually, and technically it's very difficult today, to have an account of individuals or for firms, households or firms. The fact that you only have these two ways means two things. First, that you can have negative interest rates, as we had recently, because the banks were willing to pay an interest rate back to the bank for keeping the deposit, because the alternative was to keep cash. So you would have to build a vault, stack your cash, have armed guards in front of the vault, and that is a cost. So if you want to make sure that you not lose the money, you might be willing to pay a negative interest rate to the central bank. But if there is a much cheaper way of stacking up money, which is an electronic way, you'll never have negative interest rates. The other thing, again, related to the recent crisis is, in the case where the banking system is not working and the financial markets are not working, central banks are looking for ways to infuse liquidity to the real economy. So how would you do that when you don't have banks, or the banks are problematic, or the markets are not working? The concept that used to exist in monetary policy theory is helicopter money, right? Which is a caricature of the idea that the central Mr. Draghi gets into a helicopter and throws cash to the people directly, because that's the only way he can finance directly households and firms. But as you said, it would be much easier and much more efficient to do so, bypassing, in the case of a crisis, the traditional financial system, if everyone has an account with the central bank, and that's feasible. with the technology.
And that's the difference, I guess, but what you're seeing here, what we were discussing here is that at the end of the day, you'd have to have some form of a wallet to hold this central bank money. And the ability to parachute payments into that wallet in the times of economic distress don't exist today, because the distributors of money into the economy are basically the banks, the commercial banks.
There's a whole set of tools that have not been researched by economists because they haven't existed yet. But in theory, if every person, individual, has his account directly with the central bank, that not only they can do negative interest rates, they can do negative interest rates based on how much money a person has. So if he's very rich, he pays negative interest rates. If he's very poor, he gets negative interest rates. Like the entire concept of fixed one deflation or inflation target completely changes because basically it's a computer system. It's all smart contracts. So it's a completely new potential stage for smarter economies.
I find all this idea of, a national cryptocurrency very fascinating. So one last question from me, and then I'm going to be handing over to the audience because I'm sure there will be questions on that chapter. For me, blockchain is all about distributed governance. And it's all about a different way of exercising control over one's rights, as Adonis said this morning. How compatible is all this idea of, a central bank operated currency with this philosophical notion of what a blockchain is about? I mean, will that currency really be an application of blockchain, or are we just talking about digital money that could be implemented even without the elements of cryptocurrency? Because obviously governance now is not going to be at the hands of the miners, the users, or whoever else. It's going to be at the hands of a central player. And this goes against the very notion of distributed governance. How do you feel about that?
I think what was mentioned here is actually quite interesting because there are like a couple of features that you can turn on and off and even create economic incentives on. So you can say if your fiat euro, your e-euro is anonymous, then you don't have those set of features. If you connect it to your identity, then you get interest rate. We are a country that doesn't have the technological ability to confiscate money versus a country that does have that ability. And maybe they're both based in euros. So there's an e-euro of a government that said, I have a backdoor to take your money. And there's an e-euro of a government that said, I can't touch the money, you can always move it externally to anyone. So everything becomes a feature, a technological feature, that can then be priced with incentives, just like miners. So I think we'll see a competition of basically how money works through those technological features.
Actually, we already have this kind of currency in Greece right now, right? So in Greece right now, if you don't know, in order to be like your deductibles, you need to use your credit card or debit card. And then, you'll see in your bank account a statement that you, based on the number of, if you have made like purchases worth 10,000 euros, I have 10,000 euros that actually, they are tax credits, and I get back a tax credit. It's not money because I cannot sell it. But eventually, it's exactly this application of money that you said. It's like a mirror euro with different attributes. The only thing that I cannot do, I can store it, I can increase it, I can redeem it for euro, actually, one-on-one. But
I'm willing to buy 10 cents on the euro.
Yeah.
But to answer, I guess, the question a bit more in detail, if you take a look at sort of, it's counterintuitive. You're talking about central bank and a distributed nature at the end of the day. But what we're really meaning is that sort of the distribution of the money into the economy. At the end of what will end up happening, you may start in a very concentrated way, but as you sort of evolve, as this evolves, and as other central banks and other global economies come into effect in this way, then you see the decentralization of all of that. So it may not be in the immediate future in terms of from a deployment perspective, but as you sort of start rolling this out, other agencies, other departments, other branches of government, other external economic actors may expand this decentralization of this.
I love this discussion. I've long been, thinking about the idea that the future commerce is going to be based on some money with properties. And once we do have money with properties, then we will see interesting things like, for example, the blockchain euro trading at a different exchange rate to the dollar than the physical euro because of the different properties that it has and the features that it has. Any questions from the audience? Yes, please.
Because, hello, yeah. Can you comment on Zcash in Venezuela? Because you see an increasing trend of people shifting to Zcash or other cryptocurrencies in Venezuela. So if the government finally decides to address this problem after solving all the problems that are going internally, what are the steps that they could take, or what measures they could do to bring their own currency into circulation? Because what if the public decides that they wouldn't use the government's currency as opposed to cryptocurrencies?
Who wants to take that?
First of all, we'll definitely see countries that type of thing is happening in the next 10, 20 years, because it's a matter of your freedom, your political freedom. Are you allowed to hold Zcash in a country? Yes, no. A country can say, by the way, this was in the 18th century. People started minted in Britain pounds, and there were private mints until basically the government or I think it was the Queen and King, decided to execute anybody who does that. So we'll see something similar. We'll have some places where it's outlawed. I think once it's happening, it's going to be very hard to outlaw it, because it's digital and it's completely private in the case of Zcash. But I think it's a matter of the public voting if they want to truly separate some of their finances from the government. Eventually, government has this tool called taxes, where you either pay taxes or go to jail. And therefore, they have the ability to force you to also have fiat. Once they have the ability to also force you to have fiat, you need to convert somehow your Zcash into fiat, where they can then find your Zcash. So it's complex, but definitely we'll see this tension in a lot of countries, especially where the existing financial services industry will collapse.
Thank you. I think this is another version of what we have seen also in the past, where you have a country which, for whatever reason, has a weak economy, high inflation, and you have the local, the official currency, and at the same time people use the dollar in the side. And more they use more the dollar than they use the actual currency. So it is a function of how strong the currency actually is in the economy of the country, or how credible the country this is. And whether you'll see one day now a reversion to just fiat money through prohibiting any kind of transaction in any other currency or not. I think that would be different from case to case. Sometimes I think in such cases the governments allow this to happen, because this is the only way in which actual transactions will happen. So we'll see. I mean, it's difficult to say one way or the other.
But also think about potentially another government like China going to Venezuela and doing a helicopter bin there, just giving people EU1.
Interesting times ahead. Any other question? Yes.
I'm curious to know your opinions on the US dollar tether.
I think it's a very interesting experiment. So to whoever doesn't know, US dollar tether is a subsidiary of Bitfinex, one of the largest Bitcoin exchanges, which has created basically a way to balance their books, to what I understand, in a big problem that they have, which is no bank accounts, and created basically a virtual dollar, which is used to create the dollar liquidity on the Bitfinex exchange and several others. I think it's very interesting because every financial institution basically registers their own virtual dollars. So when you own any dollars in a bank, they register their dollars. It's that bank's dollars, basically. And what they did is they tokenized the dollars of the Bitfinex ecosystem, made it tradable to Bitcoin and to all of the different assets on top of the Bitfinex platform, and actually created suddenly an asset that has a life of its own. So Tether USD is basically very similar to Bitfinex USD. They've sort of outsourced or exported the database in the field of every financial institution, which is their balance sheet dollars, just for other people to trade in it even outside of their ecosystem. So I think it's super interesting. I think that the reason it's also interesting is that the history of Bitfinex actually got robbed. So the reason they got so innovative is out of distress. So somebody robbed, I think it was $70 million from Bitfinex, and because of it, they had to create a tokenized dollar debt to pay their users. So when you think about Tether, which is one example of tokenized dollar, then the value is equal to dollar as long as Bitfinex is operating and is not default. And if it goes default, then suddenly it simply will go down like a form of debt. So I think it's a very interesting experiment, which we'll see more of it. But it shouldn't logically be worth exactly the dollar. It should be discounted to the dollar. And it is actually worth exactly the dollar and even more sometimes.
It's a form of debt.
Yeah, it's a form of debt. It's a sort of debt of Bitfinex. But it doesn't act like it on the markets, which is quite interesting.
These are all stepping stones towards a central bank currency at the end of the day. At the end of what we're seeing is sort of many types of consortiums coming together, banks, groups, putting together commercial paper, but tokenizing that in essence. And these are just different variants of that. Ultimately, you start with cryptocurrencies, the public cryptocurrencies, and you keep, I guess, institutionalizing them until you get to the point of a central bank one. These are just stepping stones towards that.
And I think one point here is, if we were truly liberal people, then we, subscribe to Hayek, and Hayek was not very fond of a monopoly of money. The thing is, at this point there are so many digital tokens, so many different fiat currencies, and you can hold pretty much everything, right? That's too much complexity for people to deal with, right? And even though, we are, let's say, big proponents of freedom and liberty, and liberalism is the religion of today, at the end of the day, people don't want to deal with all this. So we see in the stock market, people don't want to cherry pick stocks anymore. Like, all the money is going now to index funding, right? So eventually, I think, what is interesting also for us as a venture capitalist is to see like a world where we have all these competing assets, and actually our wallet is also an automated broker. Mm-hmm. And you make transactions based, and our wallet will decide that I'm going to pay you with deflationary money because I think your service is not worth so much. And I have so much of it, so I want to get rid of it. Or what if I give you Bitcoin? It's going to deflate, and it's going to be more. I'm going to give you a discount because I'm going to pay you on something which is deflationary. So we have all these different ramifications of the things we're discussing, but in the end of the day, we should never discuss why in the first place we use all these different things and we want to, to liberate money. But after you give too much freedom, there is the negativity of negative freedom, and people don't want it. They want something back. They will go back to a centralized service. They will go to a wallet with an algorithm, where the algorithm is going to make a decision, how to pay, and I'm not going to do it. So that's a very interesting discussion. I think there lies a lot of opportunity for products that actually abstract this complexity from people.
That's where potentially in the future you may end up seeing something like a crypto SDR, special drawing rights.
SDR, yeah.
That's like exactly, by the way, what we do. You should download our app.
Yeah, that was Bancor, but it's not doing very well.
So yeah, if I can offer my personal opinion on that, I also agree that Tether is a very interesting experiment, and I'm personally surprised that we haven't seen more pegged to national currencies, crypto assets, and it's certainly a stepping stone to the future world of central bank backed currencies, because at some point people will start warming up to the idea that they can now own a cryptocurrency that doesn't suffer from any volatility effects against a fiat currency, and at the same time it is backed by a sovereign rather than backed by Bitfinex, as in the case of Tether. So I expect these to be happening more and more in the future. Not sure that all of these are going to be successful experiments. This is the problem with experimentation. Some of them will be failures, and maybe we will see Tether at a huge discount to the dollar at some point. But as far as moving forward in a world of tokenizing national or supranational money, I think this is the right way to go. Any other question from our audience, please? Sorry.
Hello?
Yep.
I wanted to know your opinion on how cryptocurrencies could work in a closed economy such as Morocco.
Any opinions there? You wanna?
I think it's the central banker role.
Yeah, I think it's one of the big advantages of cryptocurrencies is the ability to use them cross-border, right? So obviously if you have some form of restriction in the movement of any type of money there, you will probably be considered as breaking the law if you're doing that. So you might see, of course, cases. It opens an interesting question whether you can enforce such controls anymore in the moment that you have alternative ways of making a payment, which is something that central banks and governments may need to consider in the future when they are contemplating such constraints in the future. But I think in the moment, I think the situation will probably look like this. If you are doing it, you're probably being considered to be breaking the law, so you're doing it at your own peril. Can this be enforced? That's another question, whether it is going to be enforced.
I think a good example of that is China. So China, in theory, is a closed economy, or relatively, well, at least has constraints on cross-border. And I think that during and before the China ban, everybody sort of thought this is doomsday. 85% of the world trade volume was in China. When China banned Bitcoin, it was in 5,000. It went tumbling down to 2,500, and people said, is this the end of Bitcoin? And look at Bitcoin now rising from the ashes 2 months later, even less. It's 7,500. And basically, by the way, it's probably still booming in China. So the government was able to close all of the businesses that dealt with converting yuan into Bitcoin, but they're not able to tell people it's illegal to convert yuan into Bitcoin. So suddenly a person that has the ability to somehow buy Bitcoin overseas, whether it's through the internet in a Korean or Japanese exchange, or whether it's people actually going through the border to Hong Kong, etc.
Satellite links. You can now, emit transactions on the blockchain via satellite link.
The Blockstream thing.
Yep.
So it doesn't really matter how it's hard to block it, and the fact that the government there banned it, and yet it's still on its course, I think it should a bit scare some of the governments from trying to ban it rather than to understand how to work with it, because it doesn't necessarily impact the consumer behavior. It impacts the legitimate business's ability to trade in it, but not consumers or non-legitimate businesses.
If you separate, I guess, the speculation aspect out of it, remove that, and look at it purely from a utilitarian perspective, obviously it's serving some need in these countries when people are using these cryptocurrencies for either cross-border payments or internal payments or payments just in general. Now, clearly, that's an unmet, opportunity for a central bank to issue a currency to address that need in the marketplace, and that's a door opening for them to look at that.
I think they will be exploiting the opportunity. There was a question there. Yeah.
You hear me?
Yes. Yes.
My name is Guy. My voice is not very good, but I'll try. I'm from Israel originally, but I'm based in Russia. And eToro is the, I guess, vehicle or app through which I discovered cryptocurrency. So I have a question for you, Yoni. What is your plans for the future for blockchains and crypto traders? And what are your advantages which you offer? Because like you can just buy cryptocurrencies, or you can trade in exchanges which probably offer better terms or better spreads or liquidity. So do you offer to compete with blockchain-based exchanges, or do you just want to keep your online?
So we are currently developing both a wallet and also working on a decentralized exchange internally. So we're looking at the entire ICO space and tokenized assets. Basically, the tokens of all the ICOs is something interesting we could go into. There are some limitations which we have, as we're a regulated financial institution, both here in Cyprus and the UK and Australia. So We need to constantly have a dialogue with the regulators to understand what's possible in every country, also in Russia, of course. So we're basically doing that while trying to keep the best possible service to consumers, knowing that they work with a regulated firm that has the sufficient scale of both users, technology, employees, etc., to protect basically your assets. So my sad story is, so I'm a geek, I'm a computer scientist, so I've been dealing with Bitcoin for quite a while. I just got reminded again that I lost a key, my private key, to 50 Bitcoins. So that's a lot of money. And from time to time, I'm thinking of taking like 2-week vacation just to find out where is the private key, where can I find it. But that's where eToro comes in to basically enable our consumers to know that we keep it for them. We have an IT team, a security team. We simplify the process to hold crypto assets. But once we also have a wallet, we'll enable people to extract their Bitcoins and Ethereum directly if they want to keep their own private keys. Just if you do keep your private keys, please give it to somebody who will make sure you don't lose it.
Good advice.
Trusted third party.
Please. Yeah. I see lots of questions. We have 4 minutes on my timer, so I'm not sure we can take them all, but, please. Thanks.
Hello, Alexander. So there is a strong belief that inflationary policy is needed to boost the economy. And on the other hand, jobs are disappearing, being automated. Do you see in the future tokens with consensus-based tokens implementing inflationary policy and things like universal income type of token?
Good question.
And I alluded a little bit to that when I said that one of the advantages of when we're talking about central bank issued currencies is that it could simplify the way in which you approach deflationary situations by directly providing liquidity to what we call the real economy, as instead the financial intermediaries that are supposed then to put the money with the real economy. And usually this doesn't happen in cases where you have a credit crunch, where there's no trust to the ability of people to repay. So that's certainly one way of doing that. Again, you have a currency basically that is issued by the central bank, so it basically is as another tool to increase the balance sheet of the central bank. But you could do that in a way in which it directly affects the households and firms rather than the financial intermediaries. Of course, there is an issue that needs still to be tackled here, and that's the credit risk issue, right? When you're providing cash, then cash is cash. That's the one possibility. And when you're providing this to banks, first you usually do it against collateral. And secondly, central banks usually are also the supervisor of banks, so they know a little bit about who they are lending money to. We need to find solutions, and then other type of technologies that like artificial intelligence come into play on finding out more about households and individuals and firms when you are supposed, or when the central bank is supposed to lend them money directly. And that's a new, completely new field that needs to be tackled.
Yeah, we're also participating in a project of internet basic income, so called GoodCoin, which is basically to create a cryptocurrency which has social identity connected to it and an inflationary model which actually gives negative interest rates to the richer and positive interest rates to the poor. So there are a couple of projects like that running now, and people are working on stuff like that.
Last question, please, because we have only 1 minute. Thanks.
Just a small question. How can a private person get ready for this revolution, if by investment or by employment?
Excellent question.
I think right now labor has the lowest ROI. But of course, it's a get richer, world. But what really makes you, investing in something and making returns is the asymmetry of information. So you may invest in Bitcoin now. For some people, are going to say it's too late. But some other maybe have a belief that it's going to be 100x from now. So you just buy one Bitcoin and you're good. But of course, in order to be able to understand whether you should keep your Bitcoin, you should always be up to date with it, with all that's going on and the underlying the technology. It's not just what is the high-level discussions at a panel like this. You have to understand why people want to go to nurse signatures. And then being able to study, it takes a lot of time. So if you can find employment where you can actually be exposed to this environment, that's really great. Otherwise, you have to find a way not to work and study this and invest.
And I would, and again, rendering this is not investment advice, but I think holding, again, if you're not into crypto yet, holding 5 to 10% of your liquid investable assets in this asset class makes sense, I think, because again, there is a potential for 100x, but there is also a potential to completely lose it, and to find deployment in the space, Ira, you can work in eToro.
Excellent. So I saw a lot of hands going up, and I think this attests to the interest that this panel has generated. I hate to stand between people and their lunch, though, so we'll have to wrap it up here, and obviously our panelists will be available for questions and meeting them later. Please join me in thanking them for their participation.